I started buying Palantir when it was $20. I bought it more when it went to $7. Similarly, I bought AMD at around $100. AMD has doubled since then, and Palantir has more than 10x. If you give me 5 minutes of your life, I will be able to show you how to find these massive opportunities yourself using 4 simple steps. So let's get right into it. Step 1. Finding companies with strong financial foundation. Investing in S&P 500 is safe investment with 8 to 10% returns annually. Let me show the simple strategy which yields 222% returns in comparison to 90% returns by S&P 500 index in the last 5 years. To filter strong companies out, we run them through a 3-layer sieve. Layer 1, evaluation. PEG ratio is price to earnings divided by growth. If PEG ratio of a company is under 1, it is the holy grail. It means you're buying a company at a discount. Filtering S&P 500 with PEG ratio less than 1 leaves us with 142 companies with an average return of 134% over last 5 years. Let's apply layer 2, which is safety. We are looking for companies which has twice as equity in comparison to debt. This means when the market economy isn't strong enough, these companies can not just survive, but use the equity to wipe out their competition. Applying this safety rule, it leaves us with 39 companies. The average return increases. It's now 168%. Let's apply the final layer. That's the engine. That's the earnings growth. If you aren't growing by more than 10% annually, you aren't building an empire. You're just a utility which can be easily wiped out. After applying all the 3 layers, we are left with 26 elite companies. This group returned a massive 222%. If we break it down by sectors, technology crushed the index by a massive 428% returns in the last 5 years. Energy and industrials both returned more than 2x. Materials was at 177%, consumer at 116%, whereas healthcare lagged behind at only 47% returns. Let's see the breakdown within sectors. In technology, nvidia stands higher at 1,253% returns. In energy, Marathon Petroleum Corporation as well as Valero Energy Corporation both outperformed the index with an average of 250% returns. Healthcare returned only 47%. Moderna lagged with negative 66% returns over 5 years. Let's move to step 2. Step 2 is finding the Megawave sectors. A financial fortress is a great foundation, but what finds opportunities for generational wealth is the Megawave. You can be the best sailor in the world, but if there's no wind, you are stuck. That's why I had categorized the 26 elite companies into categories. Now let's take a look at this mystery company. Its PEG ratio was 0.9, equity to debt ratio was 4.5, its EPS growth was more than 50%. This was highly undervalued in the AI computing industry. In the next 5 years, this company returned more than 2,000%. Yes, it's nvidia, because the AI computing sector grew massively. Let's take another example. This company in 2023 had PEG ratio of 0.7, had lots of equity in comparison to debt. The EPS growth was again more than 25%. It was in the ad tech industry, and this company gave more than 5x returns in the next 3 years. Yes, it's Meta. From 2023 to 2028, the ad tech industry was supposed to double. If you go back to sector, technology is growing right now at a rapid pace. No doubt it outperformed the index with more than 4x return. Let's move on to step 3, blood in the water. This is where most investors fail. When the market crashes, they sell in panic. But because we pre-qualified our fortresses, we know exactly what is on sale. We need to treat a crash like a luxury store with its best products at 50% sale. You aren't guessing if they'll recover. You're looking at their cash reserves and realizing that the market is handing you a gift. Let's go back to COVID crash of 2020. Meta, Apple, Google, nvidia, all these major tech companies had dropped more than 30%. Nvidia, as we know, has grown 20x since then. And all other big companies, Meta, Google, Apple, have achieved more than 2.5x returns. If we go back further to financial crisis of 2007 to 2009, Apple 5x'd within the 5 years from its bottom, and Google almost tripled within the next 5 years. When there's blood in the water, that's where generational wealth is made. Final step, the time machine test. The final test is to project the best case and the worst case in the next 5 years. Worst case should beat S&P 500 index, and the best case should make your jaw drop. It should make you go crazy and excited to buy it. Let's take an example of AMD when I bought it last year. Its PEG ratio was less than 1. Its supposed to grow 35% CAGR in the next 5 years based on the analyst day projections by Lisa Su. Its equity to debt ratio is more than 4. The data center industries is supposed to grow massively. Let's project the worst case. Even if it performs at 30% CAGR for the next 5 years, its revenue would be more than $100 billion in 2030. Even if we keep margin of 20%, which is the current margins, that will mean more than $20 billion in GAAP net income. If we keep a conservative PE ratio of 27, its PE ratio is more than 27. This brings AMD's price to around $400. This is 4x within the next 5 years based on $100 price when I bought. It's clearly beating the index. Now let's take the best case. Say it grows 35% CAGR, its margin increases to 30% net income. In that case, their revenue would be around $150 billion. GAAP net income would be around $40 billion. And if we give it a PE of around 55, that will bring the stock value to more than $1,000. Yes, that's the jaw-dropping case I was talking about. In conclusion, the simple 4 steps I mentioned: finding the financial fortress, riding the mega wave, buying more when there's blood in the water, and making sure the companies pass the time machine test. Beating the market isn't about being a genius. It's about the discipline to follow a repeatable system. It's time to stop tracking average and move closer to financial freedom. Hope you guys liked the video. Please like, share, and subscribe for more such videos. It gives me the motivation to share videos like this with all of you, and I hope we all grow towards financial freedom together. I'll see you in the next one.